What's up, everybody? Today we're going to be having a look at a strategy that ICT said you can never lose from. So we're going to have a look at it today and see if it's true. And in fact, I've had a look through it, and guys, I'm struggling to find where you do lose. So it's really good. So I suggest, guys, that you stick around for the whole video. We're going to dive right into the strategy in just a minute. However, guys, just before you do that, I'd recommend, if you guys want to learn more about trading and learn to trade the same styles that I trade, the link down below will take you to my Discord, where you can join. You can get access to all of the trades I take, so you can learn as I'm trading and trade along with me, as well as get full access to my course. And all of that is down below in the link in the description. And guys, if I could just ask you to go down below and like and subscribe to the channel if you are not already, and just comment below and let me know what you want to see in future. And if you guys have any questions, please feel free to let me know. So guys, let's hop right in and I'll show you exactly how this strategy works. So basically, what we're looking for is simple. Most people are looking for this, right? When you're looking at supply and demand trading, okay, people are looking for this, okay? They're looking for price to create higher highs and higher lows, right? They're looking for price to tap into demand and supply areas. Okay, how is a demand and supply area caused? Because of a break of structure, okay? Clear break of structure, that is an impulsive move up. And then price will create a demand zone like so. It will tap in and go and break the next high, okay, and continue to do this. However, guys, what price does actually do is it comes and this has double liquidity, because it has this zone right here where people are often looking for a break and retest, right? So people are looking for a break and retest at this zone, but what happens is price comes right through, takes out these traders here at this line, okay? So we've got a ton of money at this line here, okay? But then we've also got money sitting below this low, because there's a whole bunch of people trading this demand, okay? So now we've got even more money sitting below here, but we're taking both of these sources of liquidity out, and we're simply going to take the fair value gap that appears at this zone here. Okay, so if you guys want, stop at this point, take a screenshot, because this is extremely valuable information. Okay, this is the basic gist of the strategy. We are taking out both the supply and demand traders and the support and resistance traders with this setup, and that's what makes it such a high probability setup. And that's why I was so extremely impressed when I learned this in my ICT training, and when I was doing my research and looking for new methods on ways to trade and be profitable. Okay, so this is the setup. We would go short at this point here in this particular example, and we would target the lows. We need at least a 1 to 2 risk reward ratio for this particular setup. Now I'm going to do it on the 15-minute, okay? And we can see here in this particular example right here, okay, that we have an example right here. Price has come, taken out these highs very aggressively with this aggressive candle, okay, and there's some imbalance here. So people are starting to look at this zone as a potential supply zone. You can see it already tapped in right here and reacted. So a bunch of people are getting long here to go up, okay, but what's actually going to happen is this. It's going to just violate this aggressively, okay? And then guess what? We've got a big chunky area right here, okay, which is our fair value gap. I'm going to make it a different color. Okay, so this is our fair value gap, and this was the previous demand zone, okay, that got flipped. So we speak about this in our course in the Discord that we run. That obviously includes our daily analysis and our trades that you can follow along with. But basically, guys, when you've got a setup like this, you can see that the overall fair value gap here is quite large and it's quite low down. So what I would do, and the reason I like the setup so much, like I said, it's flipped this very prominent demand on the 15-minute, okay? And so what I would look to do is try to get a slightly tighter entry, just purely because my risk reward wouldn't be particularly brilliant in this scenario. So I would look now for my fib tool, okay, excuse me, and then I would look to enter, okay, at the 0.618. Okay, and the reason for that, guys, is because, again, this fair value gap right here is too far down, okay, firstly. And secondly, it's a very big one. So that's what I'm going to do in this scenario. You'll see ICT does the same thing with his actual trades. So I would get in at this point, and we're looking for a minimum of 1 to 2 risk reward. And so that's my sort of rules. If the stop is going to be more than, 100 pips, okay, which it was going to be like 2,000, then yeah, then I'm looking to make it a bit smaller with the fib tool. Okay, so you bring the fib tool in, you look at the 0.618. In fact, 0.786 is actually a slightly better place to go. So everybody knows that is the golden zone of the fib. And so what we're going to do is we're going to target that middle zone, the EQ of the 0.618 and the 0.786, and we'll target the lows. And let's see how it plays out. And there you go. Right, so let's have a look at a few other examples as well. So as we can see right here, so again on US30, what we would be looking for is basically a very sharp violation to the upside. Again, this is on the 15-minute, so we've got price breaking here sharply and creating a clear demand zone here, okay, which we are looking for price to flip. Again, these zones here have some money sitting right at them, okay. Why? Because people are looking to get long here, okay. And then obviously right here we've got people waiting to get long here, and so their stop losses will be sitting probably underneath right here. And so that's where we're looking for price to go, and we can see it goes quite aggressively, okay. And so now we're looking to find the fair value gap, which would be right here, okay. And in this instance, okay, on US30, we would be looking to go short, and because it's less than 100 points, I'm okay with just putting the stop loss just above. Okay, we don't need to use the fib tool on this, and then again we're just going to target 1 to 2. So let's see how this one plays out. We get tagged in, it comes a bit closer to stop loss, and there you go. So there's another winner that we get with this strategy. And again, guys, note, and this is why backtesting is really, really important. You're able to record all of your results, and you're able to have a look at the nature of things and get familiar with how these setups look. Note how these moves are so aggressive. This takes liquidity extremely aggressively, okay? And then when it comes back down, it's also moving really aggressively down, okay? That's because it's taking the liquidity, okay? And it has to be aggressive in that manner because it's literally moving to where the money is, okay? Okay, let's have a look at another example. Again, it is going short. The market as of recently has been going short a lot. So it's no coincidence that these moves are often short. Now, what we can see again, guys, is the same pattern happening. And this happens over and over and over and over again, guys. You'll spot this all the time. Right, so we would get involved at this point. I would then draw my fib, and I would get involved at this short position. Give myself a little bit of breathing room, okay? And then we would target the lows, right? So let's see what happens with this position. And boom, we hit it pretty quick. Again, these are 15-minute candles. I prefer trading the higher time frames. So yeah, as you can see, guys, it's very good to give yourself a little bit of breathing room on these positions, specifically because it is indices and they like to target the liquidity. So give yourself at least 10, okay? But I would say to include spreads for 20 points, okay? So that's it, guys. That is the strategy that ICT was talking about recently, and I'm seriously blown away, like seriously blown away by this. So this is another tool that I put into my toolbox, and I look for these setups often. I'm yet to find one that isn't working out. Like, I'm seriously blown away. So yeah, guys, that's it for today's video. If you guys really enjoyed, please do like and subscribe down below. Thank you so much for all of your support so far, and I will see you in the very next video. Cheers, everyone.